While most Asia equities strengthened today on improved risk sentiments, the currency markets are generally trapped in familiar range. The IMF said that Asian growth is projected to pick up very gradually, and the region will remain the leader in growth. It expects Asia to expand over 2 percentage points faster than the world average next year. However, it also warned that sustained high rates of growth over the medium term cannot be taken for granted. And it expressed concern that the magnitude of the recent slowdown in some large Asian economies has raised concerns that it might not be just cyclical. And, considering that inflation expectations have remained well anchored, the IMF urged that, should activity fail to pick up as projected, further easing may be warranted. Growth in Asia is estimated to be at 5.4% this year, around 0.6% lower than April's forecast. And there is 1 in 7 odds that Asian growth will fall below 4% in 2013. Hard landing remains a lower probability for China. IMF Managing Director Lagarde suggested that debt-ridden countries such as Greece and Spain should be given more time to resolve their fiscal deficit problem, as recovery would be hurt if the austerity measures were too harsh. While this might serve as good news for debt-ridden countries, creditors, especially the biggest one, Germany, were dissatisfied. German Finance Minister Wolfgang Schäuble stated that the IMF has time and time again said that high public debt poses a problem, so when there is a certain medium-term goal, it doesn't build confidence when one starts by going in a different direction. When you want to climb a big mountain and you start climbing down, then the mountain will get even higher. Meanwhile, Lagarde also called for creditors to give haircuts on debts loaned to Greece so as to close the gap more easily. Regarding this, Schäuble said that, should this be really carried out, the preconditions for further guarantees or payments would be destroyed. IMF Deputy Managing Director Naoyuki Shinohara said that Japan is suffering from deflationary pressure, but room for fiscal stimulus is limited. Instead, he urged there are various things the Bank of Japan can still do with monetary policy. And he suggested that if the bank were to buy foreign bonds as part of the quantitative easing program, it would have to do so continuously, and thus send a wrong message to the world. It's equivalent to intervention and falls under the jurisdiction of the finance ministry, not the bank. Regarding the territorial dispute with China, he's confident that policymakers of both countries are capable of finding a solution, but if the situation deteriorates sharply, it might potentially emerge as a risk. In the U.S., Philadelphia Fed Plosser warned that the recent QE3 actions carry significant risks. He reiterated his opposition in the September meeting as increasing monetary policy accommodation is neither appropriate nor likely to be very effective in the current environment. He said it's unlikely to see much benefit to growth or to employment from further asset purchases, and the potential costs and risks associated with these actions outweigh the potential benefits. Also, he grieved again that conveying the idea that such an action will help speed up the recovery risks the Fed's credibility. Plosser expects that the appropriate monetary policy is likely to become tighter more quickly than the committee anticipated in its latest statement. On the data front, Japan Tertiary Industry Index rose 0.4% month-on-month in August. Domestic CGPI dropped 1.4% year-on-year. Eurozone industrial production, US PPI and University of Michigan sentiment will be released later today.